Hello, I'm Alex Katsaros. I'm the CEO of TopFX. TopFX is a CFD brokerage regulated in many jurisdictions around the world with presence in all Arabic countries, an office in Dubai. We speak Arabic, English, any other language we want. Today I'm going to present moving averages. It's a presentation about trading and about technical analysis. The presentation is normally for like 20-25 minutes, but I'm going to have to rush through a little bit because I know that I have only 15. So let's go. Moving averages is the simplest, yes, most effective trading tool. Again, TopFX was founded in 2010. We're regulated by FSA, and in Cyprus, we're leading provider of prime services to global clientele. We started as a broker-to-broker. We offer liquidity as a liquidity provider, and we make tailor-made solutions for brokerages. 12 years of history, swap-free accounts, raw spreads from 0 pips, C-Trader and MT4 with 99% uptime. You can trade metals, energies, forex, indices, stocks, ETFs, cryptos, anything that you like. Execution time below 25 milliseconds, no slippage, no requotes, leverage up to 500, and a dedicated Arabic team for Arabic support. There is no monitor here, so I have to, turn back to see the screen all the time. The new C-Trader, that's what we're presenting in. This is a platform that we're offering along with MetaTrader. I was happy to be part of the team that created C-Trader. It's head of product development. It supports 5 trading methods, greatly enhanced charting, portfolio management functionality, and market-centric interface. And obviously, you can draw any kind of indicators you want, like moving average that I'm going to show now. This is how the new C-Trader looks like. It supports charts, a symbol-centric interface. I won't go too much into it because the time is short. You can trade via fixed API. You can trade manually. You can automate your trading strategies. You can copy or use in-platform signals in C-Traders. Now, before I talk about moving averages are part of technical analysis. Technical analysis is like the art of looking at charts and understanding or trying to predict what's going to happen in the markets. However, you have to be very careful with technical analysis because it's very speculative, and you have to understand that technical analysis is it goes together with economic and fundamental analysis. You cannot just rely on technical analysis and trade. It has been proven that it's kind of next to impossible. You have to use technical analysis to use good entry, good exit, and understand how the price is moving, but you should always take really into account what's happening in the markets, economic conditions, and what's called fundamental analysis. So, second point, the technical analysts, however, say that the price, all possible information is already printed in the price, so seeing the price is good enough. And it's true. Technical analysis will show you what exactly is happening now, and yeah, everything that's happening is included in the price. However, if you want to know what's going to happen in the future, you have to know how the economies are going to move, so you have to be very careful about what's coming up, the economic calendar, all the economic stuff, and what's happening in the world. So it's advice for you guys to trade using economic analysis and technical analysis. Can you guys not unwrap the awards now? Sorry, hey. Unwrapping the awards now doesn't work, sorry. Thanks. So, again, moving average characteristics. The moving average plots the average of the closing price of X previous periods in the chart. So it's just a line that averages the price of the chart out. The more periods that you put in the moving average, the farther away it's going to be from the chart. The less periods that you put in the moving average, the closer it's going to be to the chart. When plotting 2 or more moving averages, the more they're tangled together. If they're tangled together, you have no trend. If the moving averages are like away from each other, it's very clear that you have a trend, something that I'm going to show you in the chart. So you can use simple moving average, exponential, weighted moving average. In my experience, I mean, you can play with the formulas a little bit, but they're very, very similar. All of them are very similar. Many indicators are derived from moving averages, like the MACD, and other indicators, like a lot of indicators are derived from moving averages. So that's how moving averages look like. Okay, I can even point here, that's great. So you see a 200 moving average is plotted with a blue color, a 100 period moving average is plotted with a yellow color, and a purple 50 moving average. You see that the less periods that you have, the closer the moving average is to the price. And the more periods that you have, the further away the moving average from the price. Also, you can see here what I showed you before, that here the moving averages are tangled together, and that means that you have no trend. You see, when you have no trend, they tangle together. When there is a clear trend, they're further away from each other, right? So the strengths of the moving average is as a very good tool. It's a very good tool to identify when a trend is forming. The period selection makes it very versatile, so you can go with a short period moving average, being short close to the price or longer to the price. Crossovers are really important. I mean, it's very important, for example, for the stock market, when the 50 period moving average crosses upwards, the 200 period moving average, or downwards, it's a change in direction. It's like really, really important. So those crossovers, they're even the traders look at them, and because of the crossover, the markets may change direction. And it's stronger in larger time frames. So imagine if you plot a moving average in a weekly or monthly or daily chart, you have a very strong indication of what's happening. If you want to trade in the stocks, for example, and you plot a daily chart in the stocks or a monthly chart and is above the moving average, that's all you need to know to understand that you are bullish and you have an uptrend. You have to be going long. If it's below the moving average, you understand that it's a bear market and the prices are weak, and you have to be very careful with your entries and what you want to do. So it's simple but really, really effective. The weaknesses of moving averages is that when there is no trend and you try to trade with moving averages, you're going to fail, because if you try any signal that moving averages give you when there is no trend, is going to eventually fail. And the crossovers lag a little bit. So when you see the crossover, sometimes it's already too late. And I'm going to show you what I mean here. You see when the moving average here is crossing over with price. You see points 1 to 3, there is no trend. So no matter where you're entering long or short, eventually you're going to lose because it's going to change direction. Same here at point 4, you have it crosses downwards, then upwards. Again, because there is no trend, it's going to be very difficult to trade. But when after point 5 that there is a trend, if you trade short, you see that you're going to do very well, depending on your exit point. So that's the point with moving averages. They need a trend in order to be effective. Now, this was like a price moving average crossover. So I'm showing you the price crossing the moving average. Now we're going to see moving average crossover. So one moving average that is shorter period crossing a moving average that's longer periods. Here we have, like I said before, the 50 and the 200. You see signal 1, the 50 crosses the 200 upwards. It's a bullish signal always. If you take this trade long, you're going to do very well. And same here. If the 50 period yellow moving average closes the 200 period blue moving average from up to down, you have a short signal, and also this signal is going to do very well. By the way, this is Euro USD daily chart. Okay. So moving average crossover in this kind of situation, it works perfectly. It works really well. Both signals are great. But if we didn't have any trend here and we had a crossover, but the price was moving flat, it would be impossible to make any money. Let's talk about the lag here that I told you before, that when you have moving average crossovers, they lag a little bit. So in point 1, we have an upwards crossover, but you see that the price has already moved up. And when you close, if you want to take the opposite direction, the opposite crossover to close your position, you also see that the price has already dropped significantly compared to the high here. So what this shows us is that if you only use crossovers to enter and exit a position, out of the possible 15,000 pips, 1,500 pips, you only get 500 pips. You get 1/3 of the position. So that means that at least, even if your entry is a moving average crossover, you have to have some other sort of exit in order to be able to do better, like Bollinger Bands or something. The battery is out in your clicker. It doesn't work. Yep. Okay, thanks. So, like I said before, if you use another exit, you're going to do better. See here, for example, if we're using Bollinger Bands to exit, so we're exiting when the price is touching the Bollinger Band. Again, point number one, signal number one, it's a bullish signal. If you exit here or here, it's a lot better than exiting on the opposite simple moving average. Same thing here. You can be going long and short, like short all the time and exiting every time price touches the Bollinger Band. Bollinger Band is an indicator that shows volatility, and it's also derived by moving averages. A Bollinger Band it plots a moving average, and then it adds standard deviations to the moving average. So again, you're using moving averages to exit as you're using them to enter. But, you know, I cannot talk about moving average Bollinger Bands now a lot because of lack of time. So again, a pretty simple strategy with moving averages. You enter using the moving average crossover or moving average price cross, and you exit using either Bollinger Bands or an oscillator. Now, here we see another signal with the S&P. You see that if you trade like the S&P daily, moving averages become really important when you have the slow moving average being upwards of the fast moving average, the 50, the purple one, being above the slow 200 period moving average. You're pretty sure that we are bullish. You see here, you see here, you see here. Stock markets are, you know, with moving averages, you don't even need any more information. And now, this is like a little bit old chart. Now they have crossed again. You see that we are like in a bear market. And again, you don't even need the crossover. If you just plot the blue 200 period moving average, if you see if the price above the moving average, we're bullish. If it's below the moving average, we're bearish. You know, analysis doesn't have to be very complicated. Again, you can trade the price cross in the stock market. So here you had a failed signal. The red signals are like short signals and failed signals, and you have like green signals. The green signals do very well. So another strategy you can use with moving average is reversion to the mean. So you can be using an oscillator, and you go short every time. So this is RSI, the most simple oscillator. Every time the price goes above the 70 line or below the 30 line, if it goes above the 70 line, you short. If it goes below the 30 line, you go long. And you close at a mean reversion. So you close the signal where the price returns to the moving average. So this is a long signal, you close it here. Short signal, you close it here. This strategy is going to do great when you have no trend. Okay, so if you have like a flat market like this, you see all signals are going to be successful and you're going to be making money. But when you have a trend, things get very difficult with this strategy because you're going against the trend. That's what oscillators do. So this signal, for example, you see that it's going to be closed at 0. This signal, it's going to be successful. This is going to be kind of successful. But generally, it's not for a trend. If you want to trade a trend, it's a lot better to use a moving average crossover or you. Mike? Good. So, an exit for moving average, you can use trend lines, Bollinger Bands, or oscillators. Like I said before, look at a very good exit here. So if I go short because of a moving average crossover, I can just draw a trend line here. And when the trend line is broken, I have my very good exit instead of waiting for the other moving average crossover. Or even better, like I said before, we can plot Bollinger Bands and exit every time the price touches the Bollinger Bands. These signals, however, are not going to go that well. this long signal actually is going to go well. This short signal, this is also going to go well, because imagine this is a short signal, right? And you exit on the Bollinger Band. This is a long signal. You exit with again with the Bollinger Bands. This trading strategy of taking crossovers and exiting on Bollinger Bands, it's not a bad strategy. Depending on your risk management, it's pretty good. You can also exit with the RSI instead of using Bollinger Bands. You do the opposite thing that we discussed before. When it's below 30, you exit because the market is oversold. When it's above 70, again, you exit your long position because the market is overbought. Also, you could have taken this signal, for example. The yellow moving average crosses above the 200 period moving average long. And you can close it when the RSI crosses the 70 line. So you're going to have a good position also. Same thing here. Short, you're going to close here. Now for the MACD indicator, it also derived from moving averages. It is created to show the convergence and disadvantages of moving averages. So it shows actually, it plots two moving averages and it shows how close or far away they are with each other. The closer they are, the weaker the trend, and the further away they are, the stronger the trend that you have. It can be used with many trading strategies. So here it's the MACD indicator. You see, I'm showing you here, I plotted the same moving averages, which is 20 and 13 on the chart. See, it just shows the exact same moving averages. And this histogram shows you how close they are together. So you have a feeling of how strong the trend is. Okay. So if you don't like having moving averages on the chart, you can just use a MACD. And every time they cross this zero line, they show you actually when moving averages are crossed in the chart. So it's just another way of trading with moving averages. You can have an entry like with an MACD. You see, when you have an MACD crossover, these are longer period moving averages here, so they're not, they're not close anymore. You can be going short every time you have a signal from the MACD, or long, depending when the fastest moving averages crosses the slowest moving average. And you can also use it, if you plot a fast MACD like this one, 2013, you can also use it for an exit. So for example, if you enter here with a moving average crossover of 50 and 200 in the chart, you can exit on the fast moving averages that you have 2013 on MACD. So the cross upwards, it's a good exit signal for a short position, like here. And the same thing here, you have a long position and you exit with the MACD, which now you're using like 4 moving averages to trade. You're using 2 slow moving averages, 250, and 2 very fast moving averages, 20 and 13. Because the fast moving averages move faster and with the price, so they're good for exit signals and they don't delay as much. So that's what I meant at the beginning when I told you that moving averages are a very versatile tool depending on the periods that you're going to set. You want to open this is a presentation about moving averages. If you want to open an account with TopFX, visit topfx.com.sc, tap open a live account, fill in your details. You have a great CRM in Arabic, any language that you want. We support actually most languages now, must be more than 10 languages. Our KYC is very fast. You can open an Islamic account, very fast deposit and withdrawals, and the best support from the Arabic team. If you guys want to open an account. We also have partnership programs for affiliates, or if you are like an introducing broker, or if you have a trading school, or if you want sponsorship or anything. We have a very big variety of partnership programs. So, I'm Alex Katsaros, CEO of TopFX. Thank you very much. And it was great. Thank you.